Welcome everyone, this is Raja Banks. Now, I'm going to go over how to properly do analysis on charts. Now, let's get into it. First of all, whenever someone looks at a chart, you're going to look at a chart like this, right? So whenever someone looks at the chart like this, they're doing these things which I say they're not productive. And the one thing that they're doing is they're saying that, okay, we may have like a trend line, we may have a trend line coming down over here. Now we're kind of like, doing this. We may go up, we may go down. Like, all this stuff, it may work, but in my experience, I haven't seen this work as much as, you'd like to think it works. So my favorite way of doing analysis is this, and this is something that we can learn properly as well. Now, first of all, we got to clean all this up. So I'm not going to bother with cleaning this up. We're just going to jump down to the view that I like to see. So let's say I'm looking at the daily candles right over here. I like to see exactly what the candles are doing. This is what I like to see all the time. I like to see what the candles are doing. I have to look at the candles, because if I can't look at the candles, I don't know where price is going to go, which is very, very important. So first thing I see is we're creating support. Let's try this again. Okay, no problem. Let's try this again. Stupid bitch. Okay, there we go. All right. So we're creating support, right? We're creating support, and obviously, this daily candle came down. We rejected the support up over there. This candle right over here kind of closed what it is. And now we got this daily candle right over here. Now, when you're trying to define a trend is defined by where you think price is going to go based on the time frame you're looking at. If you're looking at the 1 hour time frame and you think price is going to go bullish, then that's going to be the trend. If you're looking at the 30-minute time frame and you think price is going to go bearish, then that's the trend you're looking at. So let's drop down to the 4-hour time frame and see what's happening right over here now. Now, since we're looking at the 4-hour time frame, we have some more information. Now, obviously, we have to adjust the zones, because if you look over here, this is the zone we drew on the daily, but now we're looking at the 4-hour. So this is the information we see at this point. So let's say we have a support on the 4-hour time frame over here. Awesome. Now since we have a support, we have to establish some sort of a resistance. Now we can see that, okay, there's a resistance up over here on the 4-hour time frame, right? Sometimes what traders are going to do is traders are going to say, oh, by the way, guys, there's a link to my free course. It's in the description. Go get it. It's completely free. Basics, you're going to learn a lot. Anyway, sometimes traders are going to say, okay, we got this resistance over here, but then we also got this resistance up over here. So we're going to target that resistance up over there. Now, the problem is this. Currently, we're sort of consolidating, right? We're consolidating, and if you measure the range, this is a 200 pip range over here. 200 pip range. This is the C-Trader platform on Dominion Markets, by the way, right? But if we're targeting over here, this is a 175 pip range. So now you got to ask yourself, are you going to target this resistance, or are you going to target up over here? The safest bet is going to be to target right over here based on the 4-hour time frame. Let's drop down to the 1-hour time frame. So we're dropping down and we're adjusting our zones. Adjusting zones is very, very important. Now, let's take a look at this right over here. We're looking at the 1-hour time frame. Obviously, we're looking at the candles. You can see complete details of the candles. This is how you should be doing analysis on the charts. Now, looking at the 1 hour, you can see how this zone is overlapping the 1-hour candles, right? We looked at the 4-hour time frame. 4-hour time frame, it makes sense to zone right over here below the candles. Looking at the 1-hour time frame, now we see that the zone is overlapping the candles right over here. One thing I have to stress on here is that now we have to adjust the zone right here. One thing that people ask me all the time is that shouldn't this zone be thicker like this? And the answer is no. The reason why the answer is no, because you have to look to see where the candles are closing. If you see that the candles are closing around 2384, then that is the point you want the next candle to close. So let's say we put a line right over here, and let me adjust the settings on this line. Let's make this a little bit thicker. Let's make this a little bit blue. So here we go. We got this price here, right? We got this price, 2383. This is the box over here. So what you're trying to do is, let's say if you have a zone which is thicker like this, and you're trying to see that, okay, if a candle is going to close below this area or not, then I'm going to take a trade now. Take a look at this. If price comes down to this area, let's change this to, let's change the color to red. Okay, if price comes down to this area, you want a candle to close bearish over here. Now, if you have a thick zone, this means you don't know whether you should take a sell here or not, because now you have a thick enough zone. So you're confused at this point. My favorite way to look at the zones is this, that what I'm going to do is I'm going to make this zone a little bit thinner, like this, just like a ballpark value. It doesn't need to have like a specific amount of pips that the zone should be thick enough or something like that. Like, look, now we know that the candles close right over here. So if you look at the candles one by one, you're going to see that the candles were rejecting a specific price, right? So if we're looking at the price right over here, 2383.50, and if you look at the candles, we can see that one candle rejected this, 2, 3, 4, and then the fifth candle continued to push up. Right now, if the next candles come down and you see a candle closing below, what's its price? 23.83. Now you know that in the past we had 1, 2, 3, 4, 5 candles reject this area, and if one candle is closing below this area, this means there's a high probability for price to move where? Bearish. There's a high probability for price to move bearish right over here. Now, obviously, there's a low probability that price can move back up here, but like, you know, we're trading based on probabilities. You're always looking at the best possible probability. The best possible probability over here is going to be if you get a candle to close below 23.83 based on this zone. Again, drawing this zone and plotting this area is the most important step when you're trying to do analysis on the chart. Okay, so you have to make sure this zone is thin and it looks neat. Like, look how neat this looks, right? If I extend it, let's say like this and place my blue line right over here, this doesn't look nice at all. This looks so messy, it's fat, it's thick, like all this zone right over here. So this is something that you have to look at right here. And like, you know, eventually if you do get a candle to close below this area, these wicks, they are not rejections. They become wick fills. And let me explain that here too. Actually, let's go to the 30-minute time frame first. Now, okay, now we have some more information on 30-minute time frame. Now notice on the 1 hour, this will actually help you in your future analysis as well. Notice on the 1 hour, we have these wicks, right? We have these wicks. If we drop down to the 30-minute time frame, those wicks are basically market structure, right? Look at this. This is market structure. So now you have to further adjust your zone. So what we can do is we can say that, okay, and maybe this can be our support now on the 30-minute time frame. And the reason why on the 30-minute time frame this can be our support is because the 30-minute is a strong enough time frame. 30-minute is a strong enough time frame, which is why our support goes right over here. Now, at the same time, let me do something different over here. Let's go over here and let's come down over here because I see a possible dynamic entry that we can take. We can, I think, we can try to see if we can take a buy over here. Let's take a buy here, execute a buy. This is adjust the stop loss down over here below this candle and let the rest run. Awesome. Let's go back to our six-figure account and do this analysis right over now. Again, on the 30-minute time frame, you can see we're creating a support. Now, you have to decide, are you going to take into account the 1 hour or are you going to take into account the 30 minutes? So let me break it down for you. The 30-minute is still a better confirmation time frame, right? So now you're looking to see that, okay, if we can get a candle to close below 23.81, that's going to be a best possible selling analysis right there. So we're just doing for sells right over here. Now, let's talk about buys. Okay, let's zoom out over here. Let's zoom out here a little bit. Boom, zoom out. Awesome. Now, let's take a look at this right now. Looking at the 30-minute time frame, we can see that currently we have a resistance up over here at 23.97. Now notice I'm not going to make the zone thick like this to cover the wicks. I'm not going to do that. I'm going to make the zone right over here. Right? Something, right over here that we can see that, okay, if we can break above this area, then there's a high probability for price to continue pushing up. And if we extend it here to the left-hand side, you can clearly see that, okay, if we can break above this price, which is, right over here, let's change the attributes of this, which will be, let's make this a little bit thicker. Let's make this blue like this, right? Let's make this blue, right? So if we can break above 23.97.98, there are these wicks here to the left-hand side, which becomes a wick fill. So you're just kind of like, you're doing analysis based on the fact that, okay, where can price go if we break above this area? Let's say we break above 23.97 and you get a candle that closes above 23.97, closes above. If this candle is still open and you got these wicks here to the left-hand side, this means that this candle can close back in the range if it's still open. So you need this candle to actually close above this area, because once we have a candle closing above this area, guess what happens to these wicks? These wicks then become wick fills, right? So you have to wait for the candle to close above 23.97. So these wicks, excuse me, so these wicks, they become wick fills. Now, currently looking at the chart right over here, the reason why I entered a buy, entered a buy is this, because look, we have a support formed right here. We have a support formed at this point. Price moved up, and then we created another support at this point. We've created another support. We're moving into the London session. We're moving into the pre-New York volume. So if we're creating support, there's a very high probability that we can fill this wick here in the 30-minute time frame, and with volume, maybe with NY open, we can break above 23.98, which is going to be a great idea to move up. So whenever you're doing analysis on the charts, you have to start from the daily, obviously daily, 4-hour, 1-hour, 30-minute, and as you move down the time frames, you have to adjust those zones, because adjusting those zones is very important, because only then you'll be able to see that, okay, which zone matters, how to do the zones, how fat your zone should be. I like to keep my zones, like thin, crisp, and I like to look at the markets in a way where I can see the candles themselves, because seeing proper candles is the best way to view the candles. Now, if we're in the zone, we can see right over here. If we, let's say, break below 23.89, this is, 80 pip range. So, so on and so forth. So, I hope this helped. Whenever you're opening up the chart, whenever you're doing your analysis, just look at the way where you can see the candles. If you cannot see the candles themselves, there's no reason to take the trade. No indicator is going to help you. No Fibonacci, no SMC, FVG, like all these concepts, they're not going to help. All these, like if you can't even read candles, man, looking at this new flow charts where you see numbers in the candles, they're not going to help you at all, because you have to have the ability to read candles, read price action. You will be profitable. Hope this helps. Go over this again. Practice will make you perfect. Good luck.